I have an international index fund in my 401k allocation, but it always seems to underperform like other kind of pieces. Should I be keeping it?
Okay, so there's a couple things here. There are some segments of the international market that are doing better than our market, right?
Yeah.
Mexico and some of these places. If you look at, and you can buy any slice of the international arena. It's
Hmm.
crazy. Every ETF exchange traded fund out there you can imagine, you can buy any country. So, but in a 401k, you're not going to have access to that. In a 401k, you're going to have access to probably some broad-based international, maybe emerging markets. You
Yeah, you
know,
might be have developed versus
yeah,
emerging.
you could have developed markets, which would be the big ones, and emerging markets, and then sometimes you might have the total international type thing, which would include both. If you look at those, even this year, they were hanging in there this year, and but not now, right? Ever since the AI, artificial intelligence craze kind of kicked in, right?
Yeah.
It started to move. Uh, if you look back farther, a year, 5 years, 3 years, 10 years, the U.S. market is just, I mean, it's probably a factor of 2 to 3, maybe even 4 times better return over that longer period of time. And so we've always kept a really heavy allocation towards U.S. at this point, just based on what the market is telling us. I mean, I'll go a heavier allocation towards international if it's doing really well, but
Hmm.
if it's not, you're basically taking on more risk because for nothing. I mean, you're actually getting penalized for that risk because you do have an exchange between whatever currency that stock is in into the dollar, which creates another level of volatility. Um, so if you look at the Vanguard Total World Index, it's not a bad measure to see, kind of what's going on. So Vanguard's thought process is that you should have your investments allocated in the way that the world is already allocated.
Hmm.
And so if you look at the capitalization of every company in the world and you say, add it all up, let's say 9,000, whatever it is, stocks, and then you say, okay, how much of that capitalization is in the US and how much is outside the US? And that's the allocation you should have. That generally works out to about 60% US
Yeah.
and 40% international. Like right now, it's about 63% US. Because again, we've been doing a lot better during this 2020 move. So theoretically, if you follow that kind of model, you would have your 401k with almost 40% in international.
Hmm.
You'd be pretty heavily underperforming altogether for
Yeah.
that broad-based international piece. So if I have a 401k where I'm adding money, that's different than just an investment, a lump sum, but I'm adding money every month or every paycheck or whatever it might be. I probably still have some exposure to international because I kind of want to accumulate that for the
Hmm.
long term, but it's probably more in that 10% range at this point in time. And so, anyway, it's a great question. It's an area when international does go, like it did in the mid to late 80s. Yeah, you need to have it. I
You
mean,
have to
because
have it in your
yeah,
portfolio.
it can really run hard, and everybody gets on that bandwagon. But for the last 5, 10 years, I've been hearing different people on the radio and the CNBC and Bloomberg radio and the TV and all of it talking about, oh, international is the place to go because there's more value there. You can purchase things that are still not run up as much.
Hmm.
Hasn't happened yet. It will probably happen, but man, you can wait a long time for that. So I'd keep the exposure a little bit light here, just until that story plays out. Again, if you want to play the individual countries and look at what happens, I mean, Turkey was running like wild, right? I mean, it was
Yeah.
really hot segment, and then they had their earthquake and really knocked that down. So that's the problem with playing. I don't do those. I've actually never had that smaller country type of ETF in any of our models personally.
Yeah, because you could look at the Greek ETF. I think
Yep.
it's GREK, and
Yep.
it's up 30% for the year.
Wow, that's awesome. Yeah.
But that's a very volatile investment.
Yeah, exactly. Because you got currency exchange and a small country. I mean, these are smaller than a lot of the states in terms of
Yeah.
their economic size. It's probably a lot smaller than some of these stocks that Apples and Microsofts of the world that are out there. I did see something interesting, just as a side note, when I was looking at getting ready for this question, looking at the Vanguard Total World Index. They have kind of like the top 10 stocks. So I think there's 7,800 stocks in that particular index. And Apple and Microsoft made up about 7% of that index. So if you think
Yeah.
about that, they have 7% of the world's capitalization of the stocks that are in that particular index. That's pretty incredible. Both of those hit new highs within the last week or so. So that's incredible. The U.S. has been the place to be. It's where these things are happening, And I know when we live here, we all think this place gets a little crazy, but on a relative basis, it's still a great investment arena. It still does quite well. So it's a great place to live, and we live in Silicon Valley.
Yeah.
And this is even better, personally. It's expensive and all that, and traffic and whatever. But in terms of investing, in terms of knowledge, in terms of interacting with really bright people, this is a fantastic place.
Hmm.
I really love it here for that purpose. And we get really plugged into what's happening in a lot of these different arenas, especially the technology arena. So I think it's a good spot.